Many people who spend time in the United States wonder about their tax obligations. It is a common question whether every day spent here automatically makes you a tax resident, or if there is more to it. Yes, it is absolutely possible to be physically present in the United States and still be considered a non-resident for U.S. tax purposes. Your tax residency status is not simply about physical presence. It is determined by specific criteria set by the Internal Revenue Service. The Internal Revenue Service uses two main tests to determine if an individual is a resident for tax purposes: the green card test and the substantial presence test. If you hold a green card at any time during the calendar year, you are generally considered a U.S. resident for tax purposes. If you do not have a green card, your residency hinges on the substantial presence test, which involves counting the number of days you are physically present in the United States over a 3-year period using a specific formula. This formula adds all days in the current year, 1/3 of the days in the first preceding year, and 1/6 of the days in the second preceding year. If this total reaches 183 days or more, you generally meet the substantial presence test and are considered a resident. However, there are important exceptions to the substantial presence test that can allow you to maintain non-resident status even if you meet the day count. For example, individuals on certain visa types, like F4 students or J4 exchange visitors, may be considered exempt individuals for a specific number of years, meaning their days in the U.S. do not count towards the test. Additionally, if you are present in the U.S. for less than 183 days in the current year and maintain a closer connection to a foreign country, you might also qualify as a non-resident alien. To claim this, you typically need to file Form 8840, also known as the Closer Connection Exception Statement for aliens. Understanding your tax residency status is crucial because it dictates how your worldwide income is taxed. As a U.S. resident for tax purposes, you are subject to U.S. tax on all income, regardless of where it is earned. In contrast, a non-resident alien is generally only taxed on income effectively connected with a U.S. trade or business, and on certain U.S. source passive income. Navigating these rules carefully ensures you fulfill your tax obligations correctly and avoid potential penalties. Ultimately, determining your tax residency is a key first step in managing your U.S. tax obligations effectively. By understanding the green card test, the substantial presence test, and available exceptions, you can accurately define your status and ensure you are reporting your income appropriately to the Internal Revenue Service, leading to greater peace of mind regarding your financial well-being.